Welcome to another Friday chart clinic. It is 11:30 in the morning. We've got a good host of audience here today. I'd like to welcome you, and for our new subscriber, I'd like to welcome you too. Today we got a couple of questions being sent in to me earlier on. But before that, I just want to do another sound check. Can you all hear me? Just type yes if you can hear me, please. Just a sound check. We'll appreciate that. Can you hear me? All right. All right, good, good. Sound check looks good. Okay, let's switch this off. So, few people did send me questions, and I'm just going to go through them. Actually, yesterday I was very busy preparing the question here, and we're going to have a very interesting topic today for the next 20 to 25 minutes to talk about these things. But I just want to go through the topic with you first, and then we're going to go into what I want to talk about today. Now today the Friday topic is we're going to be looking at first which is the overview of the closing bell stock pick for the last 3 months since April, May, June and 2011. So there was a question from one of our premium subscribers and asking, do we keep a record of how well we fare about that? I did some very analysis or what if scenario. Now if you did take the trade that was talked about during the closing bell that we had the last 3 months, what kind of return and where we were, okay, bearing in mind that the market did recover from May and April all the way to June, so likely most of the return should be fair enough. The second topic is someone want me to do a reading on KFIMA versus MFLA, so we're gonna look at that, and then finally is the Indo Agri SGX. So that's going to take us for the next 20 to 25 minutes. So if you have any stocks you want me to look at, I just send me on your chat thing. So meanwhile, I'm just going to get Bill to come over and.
Okay, good morning, everybody. This is Bill. I'd like to have a few things to share with you this morning. The first thing I wish to share is the first thing I wish to talk about is I received an email from one of our clients who was very concerned about his futures account in the U.S. and is it safe? Well, here's the bottom line. One of the very large futures brokerage yesterday collapsed, and over $400 million of PMG Best, over $400 million US dollars of customer money is vanished into thin air. Now, the system in the US means that the customers will probably get nothing. It's not protected like if you have a share account with a stockbroker. Futures, there is no protection whatsoever. And it turns out that the regulators are corrupt. The accountancy firm that was auditing them was corrupt, but that means nothing because the customers have lost all their money. So my advice is this. Bottom line, do not invest any of your money in any U.S. futures or commodity broker. If you wish to deal in these products, pay a higher commission, deal with OSK, because the management of that company, they gave the clients back all their money from MF Global when that collapsed, and they took it out of their own pocket to maintain the reputation. Or deal with one of the Singapore banks, UOB Bank, OCBC Bank, or HSBC Bank. Yes, you pay your higher commissions, however, your money is safe. So the second thing I want to talk about is I'm in the process of reading an incredible book by Seth Klarman. That's Sethklarman. It's called Margin of Safety. Now, this book sells on Amazon for upwards of $2,600 US dollars. It's a classic book. It's in high demand by hedge fund managers, by professionals, out of print for many, many years. So I was very lucky to get a copy of this. Obviously, I didn't pay $2,600. But I read the book, and it talks about something that applies to the market right now. Seth Klarman is a value investor. He's super conservative, super cautious, and always looks for a margin of safety in anything he buys. He doesn't buy highs. Now I notice in the KLSC right now there's an extreme amount of bullishness. Every broker in town is recommending to buy. They're pushing lots of shares which are of questionable quality to buy, and the sheep are coming in to buy, and the professionals are selling. And there's one thing that I was quite interested in was this new IPO, Gas Malaysia. I really liked it. The numbers look real good, but then because of the fact that the retailers are now chasing and all the brokers in town are recommending, I took it off my buy list. I withdrew the order, so nobody was filled on that order. I will wait until it gets to a better level. Okay, fair enough. So in that case, I decided to withdraw the order and wait for a better level. And in general, I don't like IPOs at all, simply because there is so much hype on the initial offer, and there's so many brokers who are underwriting the addition, the issue of the share. So they have huge fees and management charges that have to be covered in the IPO. So they must sell to the uninformed. And you have to remember, the underwriters, they know a lot more about the share issue than you do. They have the research, they have the accountants checking everything. So who are you? So why play a game in which you do not have an advantage? So in that case, we will wait on this one. We will wait till the froth is out of the market. And my feeling is, based on what's happening in the world, the Dow Jones is down for, I believe, 6 straight days. It's a big drop in the Dow Jones. The Nikkei was down for 7 days in a row. So all the world markets, the major world markets, are coming down. So at some point, the Malaysia market will have a correction. If we're patient, if we're disciplined, we hold on to our cash and we come in there like Mr. Klarman and pick up value at a better price, and then we have a margin of safety. So in any case, I highly recommend that you Google that name and see what you can find. There's several YouTube interviews of him. Get into his brain and you'll be a much better investor. So having said that, I really wish you the best upcoming next week, but be cautious, be disciplined. Don't chase shares that the crowd is chasing. Well, if you're trading, maybe it's okay, you make a bit of money. But investing, I certainly wouldn't want to jump in. Okay, Martin? Okay.
All right, thanks a lot. Okay. Right, we got a couple of comments here. China data, yes. The Dow Jones is down due to the data and also Korean interest rate. That's correct. All right. Okay, Jason, in here we have a question on predict the consolidated at coastal in the near. Can't hear. Can you hear me now? Just do another sound check. Can you hear me? Right. Okay. Cannot hear me. Can you hear me? Yes. Okay. Can you hear me now? All right. Good. Right. We're going to go on to our regular programs. Couple of people sent in on the stocks we'll look at now. We have too many stocks. Initially, now we have more than about 10 stocks in here, so the one we look at, I'll try to do with what I can, but we'll kick our time to about 25 minutes. Now the first one I want to talk about is on my topic here is the stock pick since we have overview of the closing bell for the last 3 months since April. Now okay, I have a Excel spreadsheet here, right? This is what's happened. Okay, another question here. Okay, sound quality bad. Okay, fading away. Can you hear me? Can you hear me now? Right. Seems to be the quality of the recording in here, but hopefully you're able to pick it up from here. Now in here, what I have is the stock pick on my closing bell for the month of since beginning of April here that we have. Then we have May here. Okay, another one sounds better now. Okay, good. May, and then we have June. Right. Up to June, so you can see we pick stock like Notion VTech, Century, Post Padini, Bolstat, Fetus, Inca. And now remember, this time when we did all this, the timing was around April-May time frame. Okay, and so the market have recovered. So you will notice that what we have in here, we do have only very few losers. As you can see, we got 1, 2, 3, 4, 5 losers out of a 27. Now that's a very good month in my opinion, and even some of the last 3 weeks that we have MBL, that did very well too. So these are the stock pick from our closing bell 201. Now bear in mind, you may not able to see this for most of you who's those of you who are a like subscriber. You would not get this list. This is for the premium subscriber that I normally talks about it on the closing bell towards the later half of it. So if you're interested to know more about the closing bell stock pick, become a premium subscriber, and when you do, you're actually doing a good cause, and also we are donating part of your fee to the National Kidney Foundation. So reconsider that. So this is what I want to talk about now. If you look through all the 27 trade, what I have here now on this next Excel spreadsheet that I have here is the distribution of the closing bell pick. Okay, from April to June. Now you will notice most of them we have couple of like 1, 2, 3, 4, 5. Only 5 losers, and the worst case was 10% here, right? That was the worst case, which actually correspond to I believe is this one here, Fitters, that we went in at 80 cents. The 9th July prices was about 72 cents. Okay, the best winner we have here was trade number 18, which is this one here. Yes, Ken 1. 1st of June we actually pick up Ken 1, and that thing went to almost $3 in here. And I think today is, let me look at Ken 1 that we have. Ken 1 3, that was $2.99. It came off since then. Alright, that it was $2.88. Okay, because when you have ultra high volume, that's a sign of distribution, ladies and gentlemen. Alright, okay. Okay, no sound. Alright, okay. Can you hear me now? It's alright. Can you hear me now? Okay, we just have to bear with the sound. If there's no sound, I'll just have to repeat it again. Okay? Alright, because that's the thing with the okay, can you hear me now? Can you just type yes or no? Right? Very soft. Okay, can you hear me now? Okay, let me just put this up again. Push it up a bit. Can you hear me now? Alright? Yes, yes. Well, what we can do is this thing is recorded. So as soon as you have the recordings, you can actually watch it again. Right? It's a very, very low volume. Unfortunately, it is. I do understand this. I don't know what I can do to actually increase the volume here that we have. Alright? But definitely for sure you can watch the recording and pick up most of the things. Now what I want to say here, let's going back to this. This was Ken 147. Now all this position, we are still assuming you're still holding it. This is the kind of return that you made. So on average, you'll be talking somewhere between 5 to 7, and there are some more than 21%. So we do have a very good quarter, which is the April, June, July. Now there's also, I do have a trading rule, which is the Traders Rule trading rule for the is if you can make 30% return in 3 days, take all the profit. Would you all agree? Right, just give me a response, yes or no. If you can make 30% in 3 days, would you take it? Right, okay, we got yes, a lot of people say yes. Good, right. So that's good. That's my point. So alright, good. So you all really understand about trade. Now if you look at it, if you were to hold almost 3 months in here to make above this line here, 30%, right? Let me just draw a line here. This 30% here, that's a tough mark because a lot of your trades are coming in below 20% to 10%. So even if you get 12% to 15%, this range in here, you want to be happy with it. Once a while you do have one of these good ones. Hey, to me that's like a what we call a durian runtuh. You remember durian runtuh, which is one of our Malaysian politicians, describes it, but most of them are below average 10%. So that's the distribution of the win and the loss. The worst case we have was 10% here. This was a good month. Now another point I did further just to show you is what if scenario. Okay, I have a what if scenario. Now a lot of people say that, hey, you may enter a better price in here. So I have 2 charts in here. Okay, now this is what we are building, is a what if scenario. So we have about 27 trades that we talk about the last 3 months there, April, May, June. Now let's say percentage of trade done. The first bar, just look at the blue chart here that I have here, this blue chart here. If you've done 70% of the trade, majority of this is what's going to happen, right? Let me just, this is like a simulation, running a simulation. Okay, let me just do something here. I think I